Woo, baby, we are live across the board today, hitting up YouTube, TikTok, and anywhere else I can pop on to do a quick Q&A on these stocks that are just making investors wealthy. I mean, this has been a rather interesting all over the board market, trying to probably confuse the hell out of many investors out there because let's be real, if you were into crypto, getting into those altcoins, you've been getting slaughtered this week. But heck, if you've been in this space endeavors, talking rocket labs, just blowing up to the moon. But there's a lot going on across the board. I'm going to talk about some of the things that I'm interested in looking forward to, especially in some of the big tech giants as we head into the third ending quarter for the year here, folks. Another defining factor for whether the markets are going to continue to push all-time highs. Of course, kicking it off with tech, because one of my favorite events of the year is going to be, I think, on the 14th, mid next week, or right at the beginning of next week. What day is the 14th next week here, folks? The 14th is a Tuesday. And on that Tuesday, Apple is going to be doing their most pivotal event of the year, because this is the year when we get to see the upgrades in the MacBooks, the iPhones, the best-selling products, at which I actually plan on potentially actually ordering them this time around because I need to upgrade my equipment. And I've been desperately awaiting for this event, but it should also give us some insights into the further expansion of the chip shortage and some of the problems that Apple is facing and how they are dealing with it through their M1 chip and some of their other manufacturing solutions. So Apple's one I'm definitely keeping my eye on. Many of you know I'm tech oriented here, so that's where most of my attention is. But I have been dabbling more down into the real estate sector because, my goodness, for the first time ever, there are REITs acting like growth stocks, and when you can capitalize on not only a huge yield but also outperform the S&P 500, and you kind of get the best of both worlds, which is typically a rarity within the dividend stock realm, especially lately, more or less lately, because again, most things have capped these new highs. I mean, when you're taking a look at like things like financials, I don't think the bank stocks are just going to be rallying into the third quarter of this year. I think they've kind of steamed out. We've noticed a flatlining in that sector, but with some specific real estate trusts, especially when you're looking at things like Stag Industrial, guys, that's encored by things like Amazon, that are it's the best way, in my opinion, to get a yield out of Amazon if you're not into options plays, because you can own them through these third party companies. And one that I actually ended up picking up here into the close today on a bit of a pullback, but I think I overpaid. Time will tell in the near term here, but I picked up some Granite Real Estate Investment Trust. This is a Canadian counterpart to Stag Industrial, also largely encored with 6% of its tenant base is coming from Amazon, and largely encored by 30% with Magna. I'm kind of disappointed with this company because you can't find it on StockTwits. You can't really find it on the internet yet. It is trading up a whopping 20% this year with a 3% starting yield. What I'm going to do here is open this board up to what you guys are most fascinated in. I'm going to drop, I wish I could drop a share link if anybody wanted to join, but hit up your questions on TikTok, hit up your questions on YouTube Live here, folks, and let's have a quick discussion about what's driving your portfolios these days. And hopefully you have some access to some of these, because I know many people in our chat group were floored by Rocket Lab's announcement of their crazy growth into the space sector, considering the backlog has grown drastically, and it's driven the stock up over doubling just in the last week here alone, folks. So it's going to be an incredible peak for that. I've got a few interesting interviews coming up for tonight, actually. In about an hour, I'm going to be sitting down with a company called, I think, Victoria or Victor Square. Oh my God, I already wrote down a list of stuff and I'm already forgetting what the company's called. This is an interesting small cap that's been trading down. And actually, the market cap valuation of this company is actually at par with their investments in the tech field. But this is kind of like a real interesting kind of an ETF of a company. And then we'll get into some questions and answers. But this company here, folks, is called, I don't even have the right sheets with me. What am I doing with my life? I'm getting paid to do this, and I don't even have the right information. It's called Victory Square Technologies. Okay, I wasn't too far off, right? But this company, guys, penny stock. I know most people might not be interested in the OTC market of things, but this company, literally, when I looked at their market cap, is comparable to the investments they've made over the last year. I think the market cap's at 40 million. They have like 3 or 34 million in investments across the entire tech sector. I mean, they own telehealth companies, esports, crypto, gaming. When I went through the list, I'm like, geez, this is going to be an interesting CEO interview tonight. So I'm super pumped for that. So what do we got here? Crispy guy. VFV is my best ETF right now. Yeah. So VFV, for those of you that don't know, is the Canadian counterpart to something like a VOO. Actually, for the first time ever, I'm kind of sticking to a VOO. The Vanguard S&P 500. I actually just started buying it because it's acting like a growth stock. I mean, 29, I think on average, it's up 29% year over year. What do you think about Well? I'm going to presume that you're talking about Well Health Technologies, another company that I had the luxury of interviewing a CEO with. And Well Health is one I haven't updated myself on recently, but obviously the telehealth sector right now also encapsulated with this Victoria Square technology companies is going to be a sector that I'm not nearly as adversed in, but obviously Kathy Wood really big on that sector. Actually, let me just look up Well Health real quick because I'm kind of curious because this was a big sponsor for us. Actually, this was our first $1 billion sponsor, I think. Well Health Technologies. Let me just pull it up and see how the stock's trading. Well Health Technologies stock. Where are we at with this sucker? Trading down to 782. So it has been flatlining, actually doing fairly well. What's the one that Kathy Wood holds? That's a good question. I'd love to check out because I can't remember it off the top of my head, but it's the largest US telehealth company. But Well Health, in my opinion, for the diversification aspect, because it's kind of like a pure play, and obviously the Well Health kind of just the healthcare technology sector. I would rather honestly go with the company that I picked, even though I like the sector. I really like TELUS. Coming from the Canadian side of the border, TELUS is probably one of the greatest performing basically just telecom providers in Canada. They've been better performing, smaller than something like a Bell, but they actually have an incredible management that has really invested heavily into telehealth. They also have large investments in cybersecurity and security-based platforms, which really ties into their Wi-Fi and their data and things of that nature. It's a huge upsell for them, right? So I like owning TELUS personally for getting telehealth access because at least it's being pushed by like what is it, like a 30 or $40 billion company. I think, I don't know, I might be smaller than that now. I can't remember exactly where TELUS sits at on the market cap, but I love TELUS. You get a dividend, you get access to all that growth with a lot less volatility risk, and usually almost a guaranteed future, because I mean these companies do have client lists already. And I mean, I can't imagine that people that are on TELUS already aren't getting spam emails about, hey, we do telehealth, connect with a doctor instantly, like because I hear their ads all the time. TELUS Mobility, they have a new telehealth system, pretty cool. Yeah, that's what we were just talking about, because I hear their ads all the time. And sorry, I'm bouncing between TikTok and of course YouTube Live here. I'm trying to optimize my platform stream. So I'm going to be expanding this maybe into Facebook Live here soon too, as I upgrade my equipment. Yeah, so Kathy Wood has TDoc. Actually, that's a good question because I know the teledoc sector got smashed. Let's just take a quick look and see how TDoc is doing. This is one of those sectors that just, I don't know why, it kind of reminds me of the healthcare sector when it took that pause for a while. Because I mean, in a pandemic, it blows my mind that companies like MPW, Medical Properties Trust, Clorox, for example, that these companies that were so well poised going into the pandemic took massive advantage of it, especially with something like a Clorox that bumped their revenue by like $1 billion over 2020, yet somehow it's trading back to its 2019 levels. And I mean, this could be said about a lot of the healthcare companies, right? So that was a sector of the market I was relatively interested in leading up to about summer of this year because I took advantage of it through the Medical Properties Trust owning those hospitals for dividends. I took advantage through TELUS, trying to poise the telehealth sector. And then, of course, I took advantage with Clorox so I can get some consumer staple brands. But those companies ain't high flying, baby. Those aren't the ones taking anybody to the moon today. Obviously, somebody, 420 Kink, actually threw in Rocket Labs. Do any of you out there actually own any Rocket Lab shares? I was a huge proponent of the space industry when it came to something like a Momentous, which was a SPAC that recently merged. I can't remember what the ticker is off the top of my head since it's merged. But that one completely broke my heart, unfortunately, due to some regulatory issues with the CEO being a foreign diplomat, or is a foreign diplomat the right word? I think seeking asylum from Russia. And because of those kind of ties with him, kind of just living in the US, having full US or Russian citizenship, kind of completely crushed my dreams and hopes with the satellite industry being largely advanced by Momentous. So instead, Rocket Labs has taken the spotlight this time around after we saw the wonderful Richard Branson completely destroy his first flight test. I mean, okay, so look, when it comes to the space industry, it's by far one of the coolest industries. I used to own Lockheed Martin, sold it for whatever specific reasons, but um, this industry is probably going to be the most volatile, exciting part of any sector of any market, because I really think once we get into the lunar missions and countries start exploring the moon, we're going to start seeing a whole new space race of economics. Because right now, not everyone agrees on space the same way. So we end up in the situation where I imagine by 2025 to 2030, when we start figuring out exactly what minerals have the most value on the moon, and trust me, there are a lot that aren't as prevalent for mining on earth, that's when things are really going to hit the board on who owns what and where these borders are going to lie and who gets to stick their flag where and draw the lines to stay the hell out of here because we're mining this. I think those realities are going to hit sooner rather than later. And this broke my heart because honestly, I thought the space race was more of like a combined effort. And we can really tell with the likes of Richard Branson trying to beat Jeff Bezos to space, completely disregarding is it FAA? Am I saying that right? Whatever the flight regulations are, because what most people weren't aware of was that they have a little system in play that when they start falling off their trajectory, that a yellow light comes on and says, "Hey, things aren't going right here. You're flying in the wrong direction." And they're like, "Hey, you know what? We can't screw this PR stunt up. We're not going to abort the mission." And that yellow light went to red, and that's what's kind of flagged off their entire tourism trips because they've completely flatlined until they get through these regulation. They'll be fine, 100%. I guarantee they'll be fine. What do you think about HHL thinking about buying this ETF to diversify into some health sectors? So honestly, when it comes to the healthcare market, it usually scares the shit out of me because things like Pfizer, when you're looking at Moderna, all these companies, they're heavily poised on drugs that do not last very long, thanks to patent expiries and U.S. regulations about how long companies can hold, basically financing control and pricing of drugs. So a lot of these have to make pivotal shifts, and you're really relying on management to make those. So I personally have been avoiding it for those reasons, even though things like Pfizer, they're great companies, they're going to do phenomenal. I just have a hard time wrapping my head around the sector as a whole. So generally what I try and do is poise myself through third-party companies that I do understand, like Johnson & Johnson, for example, which you're not just buying a pure pharma play. You're kind of getting consumer staples. You're getting access to surgeries, which have been backlogged forever. That's now taking off again for them. You're getting the whole pharma side of it as well. So I kind of like J&J is kind of like an ETF under one company. Now, you did recommend an ETF there, which is HHL. And personally, I don't like sector-focused ETFs because you end up paying an arm and a leg for something you could probably just buy individually. And taking a look at this, yeah, the last 5-year performance on Harvest Healthcare Leaders Income ETF, it's been absolutely abysmal. Whereas I would rather go with something like an ARC Genomic ETF. ARC-G is probably one of my favorite ARC ETFs out of all of them, just because they're in the genomic space. And if you don't understand genomics, it's basically going to be the future of healthcare. It's what's going to lead to the cure to cancer. It's what's going to lead to many cures, life extending beyond probably 100 years, that life expectancy, which is what we're going to see, I think, within the next 20 to 30 years, just from these advancements. I mean, Dubai released something called the Rail. I highly recommend that you look it up. They're building an entire city, and I don't need to get into this because it's astronomical, but they want to implement in this new city genomic editing and basically breeding humans from life to death in a way that is going to be most efficient. Obviously wiping out many of these genetically predetermined diseases that we have, obviously at birth. You're talking too fast. You got to be a computer. No, I just ramble because this is my job. I've taken on a new job. I'm in a suit for once because I apparently I talk enough that they wanted to give me a job where I interview CEOs on the daily basis. So I've taken a part-time, full-time job interviewing CEOs across God knows every sector that exists right now. Heavily into gold today, getting into this kind of weird Victory Square Technologies company, which seems very interesting to me. But another question, how have you done any deep dives on the drone sector lately, or any particular companies for that matter? No. So particularly in drones, this is a sector I find really interesting. It's just a matter of getting to implementation, which has been a struggle for most of these companies. And honestly, where the implementation has seen the most success currently, and I think it'll advance into things like UPS. I think we'll see it in shipping, because God knows if you're ordering a pizza, why can't it just deliver to your backyard, see like a little landing QR pad code and just lands on it, and you get a text notification your package has been delivered, right? Like that's the sensible route to go for the delivery costs and everything. But at the same time, the real advancements in drones is basically army, government, uh, anything to do with army technology. I mean, there's a company I'm working with next week that'll be posting to this channel called Quest, KWESST. This company is flagshipping some incredible non-lethal products, and they deal with drones and all kinds of stuff. And if you want to talk about drone insanity, I mean, go look at what China's done with drones. I mean, they're going to be the next weapon of the future. They're going to be everything. I mean, look at who fights real wars anymore. You think anything going on in Afghanistan has really done that much with troops? I mean, every time you hear something crazy with a bombing, it's coming from somewhere in the US with some guy sitting on a computer just flying a drone that he doesn't even need to fly, for that matter. I mean, we haven't even talked about the AI revolution here, right? Which is going to simplify a lot of these processes and wipe out most human interaction, which comes back to Elon Musk's point when he says that basically, eventually we're going to need universal basic income because all of these jobs are going to get replaced in our lifetime. And I don't know what else humans are going to be able to do except sit here and rattle their heads off like I do. No, he's fine. Very informative as always. I appreciate that. The what is that? The the good oat. So yeah, anyways, what else we got for questions? Because I don't know enough about the drone sector. Throw me a few companies. I'll take a look for sure. Is Granite a new pick for you? How REITs perform during corrections since everybody has been talking about. So the thing with REITs and the reason that many REITs are doing well, you can look at public storage, American Towers. I mean, I could rattle a list off of REITs right now. And the reason that REITs are doing so exceptionally well is any of the ones that weren't directly poised in office or mall REITs, they have been able to capitalize on restructuring their debt. Um, and this is something that's been kind of hidden from like the news feed, and it's hard to wrap your mind around because REITs balance sheets don't operate like a regular balance sheet because they do write downs, which usually make their payouts look way higher for some reason, and et cetera, whatever. But specifically, when you look at something like a Stag, an MPW right now is going through the same thing. They realize that we are heading into an environment where interest rates are going to go up. This is going to hinder, and I don't know how soon interest rates come up, but this is largely going to hinder the entire market when it comes to capital raising. And what part of the market has the most capital intensity? Real estate, baby. So what are these companies doing? Well, they're being smart about it. They're like, hey, why don't we restructure our debt now, get the lowest interest rate possible, and extend it out for the next 10 years? And then we don't have to worry about it. And obviously, they'll have to worry about it if they're going to do more acquisitions and they're not doing it through share dilution. But this has led to an explosion, especially in why I like Granite Real Estate Investment Trust and Stag, is because not only are they poised into e-commerce and just the industrial warehousing for things like Amazon, because Amazon can't even keep up with their own distribution networks because it's so expansive, that they are capitalizing in a way that is astronomical from a balance sheet standpoint. And honestly, I think it's kind of expensive here, but my God, I'm pretty young. So I picked up Granite. I already own Stag, but I just don't want to buy more of it. So I figure I'll get kind of the Canadian counterpart, which by the way, even though it's a Canadian traded company, it doesn't matter. It's all US and foreign based. They have a little bit of exposure to Canada, but all of it's in the US. So it's like, it's weird when these Canadian companies largely operate out of other countries. But I love the real estate sector right now for as long as the rates stay down. But you'll probably see some hiccups and leveling off in most big companies that leverage a lot of capital in the coming years. Because again, keep in mind, guys, I hate hearing this, but every single person loves reaming me about how I have to own a house, how you have to own a property, this, that, and the other. And it's just like, you understand that we've been in a decade of declining interest rates. When you get 10 years of downward interest rates, everything only goes up. I mean, go look at margin on the stock market right now. Margin rates, everything is so low, guys. Leveraging capital has never been easier. And people don't understand that this is an unusual time in the market for that reason. So I always kind of hinder that a market correction or a leveling off will purely come from interest, which, as far as I can tell, the Fed doesn't seem to be in too much of a rush to raise it. Dragonfly. So here we got some drone deliveries in Canada. Are they doing any well? FLT is the ticker for some of these drone companies. I know there's a lot of people that are getting hyped into it, but I don't know enough about deep diving into them. I haven't talked to CEOs in the industry, but I do believe that it is going to take over with AI, just for some simple reasons. DIR is dope too. Industrial REITs are on the come up. What's your take? I think I know DIR. Why does that sound so familiar? DIR stock. A Dream. Okay, no, DIR is that not Dream Industrial REIT? DIR. Why does this trade under so many different tickers? This is I think this is the U or dir.un on the TSE. Oh no, Dream Industrial Real Estate Trust. This. I'm so confused right now. What am I buying here? Because I think oh no, Granite. Okay, that's why I'm confused. I'm mixing Dream Industrial up with Granite. Yeah, no, Dream Industrial is another incredible one as well. Sorry, let me pull up both the charts here. I wish I could share them with you guys, but just taking a quick peek. Granite's paying a 3.2% yield. Dream Industrial at a 4.11% yield. Yeah, so this is the whole industrial sector being one of the more explosive parts of the real estate market. Honestly, the only three REITs I owned, I talked about this in a video last week or this week, was RioCan for me because it's in my backyard. Love Toronto real estate. Stag Industrial, I'm really leveraging the industrial sector, and of course MPW, Medical Properties Trust. I think those things can take me into the grave, and I could be holding on to those for the rest of my life. Favorite sector of all. So thoughts on global all-in-one ETF, includes US, Canada, Europe, etc. To be honest, when it comes to global ETFs, and I want to take a look at this real quick. Thoughts on global all-in-one ETF? Let me look that up for you real quick. Global all-in-one ETF, baby. Let's take a look. To be honest, I know a lot of people are trying to get diversification and they're trying to buy some of these larger. I'm trying to find this one here. Why do I not see it coming up? Global all in one ETF. If you can share me the ticker with that, I'd really appreciate it. But my problem with a lot of these global ETFs is, to be honest, some of the best markets are foreign right now. I mean, we can recognize that China's cheap, a lot of volatility with political rhetoric there. I mean, you look at Russia, Russia's got some incredibly cheap companies in there as well. But when it comes down to it, I always just kind of, when I don't know enough, I haven't traveled enough to get enough experience to be like fully comfortable in just leveraging capital. So I try and lean into people that know what they're doing. So when we're talking about people like Ray Dalio, major, huge investor, right? When we're talking about even the likes of Charlie Munger, Warren Buffett, and you get adverse opinions depending on who you're listening to, because obviously people look at these markets differently. But when they buy ETFs, and not that Charlie Munger does, but with Ray Dalio specifically being largely hedged in foreign markets, he sticks to the good old basic bread and butter Vanguard Total Market Index Fund. VTI till I mother freaking die, is one of my buddies would like to say it. And you're taking a look at the ticker VEQT. So that's the global that you're talking about. So QT stock. Has it been keeping up with the Vanguard? To be honest, I only stick to Vanguard ETFs just because the value in them versus like the payout or the expense ratios are much better because they have the lowest expense ratio across the ETF board, and their rate of return is incredible. Because I mean, taking a look at the year-to-date return on the VTI, it's up 20.8%. And these are global market indexes, by the way. So it's incredible that global market index funds are keeping up with growth stocks. But when you take a look at, oh no, so VEQ2 is a Vanguard equity fund as well. But you'll notice that year to date, which only goes back as far, as January here for the year to date, we can see it's up 16.9%. So for some reason, it's underperforming the VTI. And I'm a performance driven person. I don't usually reflect on past performance equaling future returns. But I do try to balance things out by looking at a year by year basis of like counterparts, because a lot of people are into, say, call option ETFs that pay really high yields. But honestly, I don't like things that underperform. And unfortunately, sometimes the bread and butter just comes from those basic companies that I know aren't that exciting, but they do the job and they've been doing it very well lately. And it's just the path of least resistance. So I don't know what's in VEQT. Maybe there's some stuff in there that you like personally, but I just stick to VTI. Did you buy BABA yet? So BABA, speaking of the foreign index funds and stocks that could potentially offer an insane amount of wealth, BABA stock, as I've mentioned, isn't a company that I currently hold. I traded it in the past, and I actually own it for my parents, which I wish I was buying it today and not back when I bought it for them, because now I'm kind of in a kerfuffle moment with that company. But honestly, here, I'll make a bold prediction right now on my thoughts with BABA. Putting the political rhetoric aside, I could talk about the ADR market. I could go up and down the news on this stuff. But at the end of the day here, folks, BABA's fundamental business has not really changed that much. And BABA is doing double the inventory and sales than Amazon. They have brought literally hundreds, if not hundreds and hundreds of millions of people out of poverty. And it is the golden child of China's entire market. Now, China, for those of you that don't know, as much of a communist country as they are, they largely copied what New Zealand did back in the big gold rush of the 70s and 80s, when they realized that, hey, why are we sticking to this rules of fundamental business when we know that this is going to work better? That's when they leaned largely into capitalism from a business aspect, leading to this greatest revolution in any economy in the world. China has gone through the greatest growth cycle, literally, of any economy over the last 20 or 30 years. And honestly, BABA should be $1 trillion company if it was incomparable to the US counterparts when you're talking Apple, Facebook, Amazon, etc. But it's not. So this leads to some interesting questions. And for me personally, my predictions on this company: come back to me in 5 or 10 years, and I would not be surprised if you 5 to 10x your money. I mean, it just, if you can get away from political rhetoric, then honestly, the biggest money I've ever made in an investment comes from incredible divisiveness on two different sides of the spectrum. You could talk about this is honestly how I think investing should work, because I think it's going to give you the best opportunities, is finding companies where people are so polarized that you have the likes of Charlie Munger and Ray Dalio arguing it out with the likes of Kevin O'Leary and other people that just can't trust China, because the ADR market isn't going anywhere. If it just disappears, it's not going to disappear because China's banning it. It's just going to disappear from the New York Stock Exchange. I could see the US maybe downlisting them, but I doubt that happens either. I really doubt that that happens. Our economies are so intertwined at this point that to cause any kind of fluctuation in those aspects are literally going to cost trillions of dollars to either market. So this is a scary time from a political standpoint, but from a business standpoint, I always believe that businesses operate exempt to some degree of politics because Baba, like it or not, is a globally diversified company, largely, in fact, poised by Amazon because most people on resellers on Amazon buy from Alibaba. I wouldn't be surprised if 20% of products selling off Amazon are coming from Alibaba, right? So, actually, do you like my pajamas? This is how I do interviews, by the way. I wear pajamas on the bottom and all suits on the top, party on the bottom, professionalism on the top, right? So for me personally, folks, I might buy into Baba. I've been having the angel and devil on my shoulder, but if you have a risk adjusted for foreign politics, I mean, go talk to anybody that lives in China. Go talk to just watch YouTube channels of people that come from China. I mean, their rhetoric surrounding Baba is a hell of a lot different than say something like CNBC. So for me personally, whether I pick it up or not is still up for debate. I may grab it. I ended up picking up Granite instead this week, but it is on my list of continual pay attention to. And yeah, we'll see what happens. I got a lucky trade with it from 200 to 220 sold out, and I should be buying back in at these levels. Alibaba is what, 2x earnings, tempted to throw. Yeah, I know. I know. When you look at the valuation metrics, everything about it is just, it's absurd. It's probably the cheapest value, one of the greatest companies on the planet. It's just political rhetoric, right? And honestly, that's one of my biggest concerns with China per se is the fact that they are so against like just the evolution of independence, in my opinion. I mean, you look at the Tencent, you look at Baba, you look at JD. A lot of these CEOs have stepped down because of how China is clamping on the billionaires, which I think is from a personal perspective on how they want to deem their society, which is fine because a lot of the laws they're introducing are actually advancing into first world kind of laws when you're talking about everything from working labor laws, etc. Some of the stuff I don't really agree with, but at the end of the day, if you can just give people the freedom to make money, be outrageous, have fun, one of two things happen: the public market either recognizes them for a fool and they start degrading their value of them because they're putting themselves out there, or two, you get an Elon Musk, where if you can imagine that Elon Musk was coming through the scrutiny of China during the PayPal days, would he have likely made those kind of radical investments into Tesla and SpaceX? Because I mean, that comes from freedom of capitalism, right? I think it's one of the greatest providers to greatest growing economy in the world, being the US. Even though the US only has a 400 million person population against something like China at like 3 billion, it somehow still dominates the US dollar, dominates global currency, dominates expansive growth and the best companies on the planet. And I think that just comes from innovative and giving people the freedom to do what they want. So that is probably one of my biggest concerns with China because I feel like they're kind of heading in a backwards direction that way to some varying degrees. But putting China aside, I'm going to finish up here. I've got about 15 minutes with you guys, so we can do a few more Q&As if you guys got any questions, or I can go take a break that I haven't had today and relax a little bit. Pajamas in the Dexter kill room. Huh? Yeah, I know, right? I had to put a cloth up, but whatever. This is kind of like a new studio setup. I'm trying to adjust it still. I'm hoping the camera quality is going to go up here eventually. Boring question. BCE going up. Is it still a good buy or should I wait for a pullback? So BCE, I think, is a Bell. Actually, I don't mind Bell too much, but I think they're too big of a conglomerate. Yeah, so BCE is Bell. They are pushing back toward all-time highs. The year-to-date performance on Bell, the Canadian telecom giant, is actually at par with the S&P 500, so doing staggeringly well. What I'm going to do for you is I'm just going to pull up their last earnings report because I am kind of curious. My biggest concern with telecom giants is the lack of ability, in my opinion, to expand rapidly. Yeah, because I mean, I don't know what's driving them up right now, but I mean, their quarter over quarter earnings aren't exactly stellar to me. And my problem with Bell is the same problem I have with something like an AT&T, right? Like they're so big, they've kind of really scraped into this market. I like Bell better because it's poised against the Canadian economy, which I think is going to grow faster from just from an infrastructure standpoint. So if there's more immigrants coming in, which we're getting 1.8 million over the next 2 years, those guys are going to need housing. They're going to need telecom. They're going to need all this stuff. So they only have a few places to go. Bell's going to largely benefit from that. I just don't like these conglomerates because I feel like they made some poor investment decisions. They haven't been proving growth is something as great as some of the smaller telecoms like your TELUS Communications. So I got nothing against Bell. If you've done some homework on it and you know something that I don't, by all means, pick it up. But honestly, I like the smaller ones better. They're going to have a better chance for room for growth, and they're doing a better job from investing into things outside of telecom. Thoughts on real estate versus stocks? Thinking about adding a real estate in my portfolio. So the difference between real estate and stocks is if you're not buying a piece of physical real estate, a stock isn't actually like owning a physical piece of real estate. Unfortunately, real estate investment trusts are completely hindered by the market, right? So I wouldn't really presume that you're buying real estate through an investment trust. You're kind of just buying equity. It's a little bit of a different operation, but honestly, in this world, I don't think you own your real estate either. I mean, I hate listening to Grant Cardone or some of these real estate moguls like Robert Kiyosaki, because the way they think about real estate is so back ass backwards from the way things actually operate today. In my opinion, they're like the old day real estate moguls, because today they always bitch at the market like, "Ooh, a 401k is the stupidest thing you can do. It's so much riskier than this or that." In Canada, anyways, I can't speak for the US, but in Canada, real estate right now, if you don't pay, okay, so you could own outright a $2 million property. Okay, your property taxes maybe what 15,000 a year at most. I can't imagine it'd be that. It'd be around there, right? So, anyways, I worked with municipalities and the people that directly deal with tax recovery losses. And within 2 years, and this is what my buddy that works with the government said, I will never go in on a private mortgage deal with somebody if I don't have full control, because all it takes is 2 years in Canada for you not to pay your property tax, and the government rips the property out from under you. They evict you and they put your house up for auction, and then they take their cut and pay you the difference. I don't care what anyone says. Nobody owns real estate no more than anybody owns stocks or money. As Dave Ramsey likes to say, you're only here to use them as tools. You can't take them to the grave with you, and you don't really own it. You just manage it. So I really hate the archetypes that live in the real estate mogul world, because they're so fixated on shit that just isn't true anymore. Nobody has full control over real estate. The government does, and nobody has full control over the stock market. The government does. And if there wasn't a better example than this 2020 March crash, I mean, take a look. The markets should be not nearly as high as they are if it wasn't for the feds owning the printers, right? And that's another crazy thing too, right? Like, it's crazy to me that you don't get to vote as a public, because in the US and Canada it's different. In Canada, the treasury is backed by the government. So the government has to mandate the issues before the treasury can take control. Whereas in the US, the Federal Reserve is disconnected from the government. They can make decisions opposition to what the government might think, and they can turn those printers on as much as they want. And the problem with doing that is a hyperinflation, because hyperinflation doesn't get accounted in real estate prices or stock prices. They just get accounted into things that you use on a daily basis, like rent, like food, like travel and gas, which is really convoluted because it doesn't bring into the full image or the scope of what printing does. And in fact, if you take inflation prices into the real estate returns, there hasn't actually been any major return in real estate any more than there has been in stocks. And I know this is a hard concept to wrap your mind around, because you have to understand, you have to realize that when they print more money, it devalues the money next to it. So if they printed 30% of the money supply in the last year, even though your house may have gone up 30 or 40%, even though your stocks have gone up 30 or 40%, that money, if you pulled it out, only goes as far as it did a year before they printed the money. So it's kind of exciting to see everything going up, but at the same time, it's not encapsulating an image where you're actually getting wealthier. It's just hindering the next person from wanting to get to retirement even further. Because now, if houses cost 30% more, stocks cost 30% more, and you're brand new to this, you now have to work for 30% more money to end up in the same situation you could have a year ago. It's really annoying. It's really frustrating. And it's just stuff that I wish more people talked about, right? But on that note, any last comments, questions? I'd love to hear about stocks that are flying or stocks that you guys think are going to go to the moon. We are 33 minutes deep. It would be interesting to see you make a video on stocks to beat potential inflation. The markets beat inflation. I mean, look at the S&P 500, right? It's literally been trading up 29% year over year, thanks to the tech boom and thanks to the inflation from 2008, quantitative easing, and even leading into the further printing of 2020, right? So there's no real way to beat inflation other than owning assets. At the end of the day, cash flowing assets will beat out inflation any day of the week for as long as they keep printing the way they do. And you're not going to lose owning general markets right now. Like, I don't think people appreciate the markets going up 20% a year. I mean, you understand that the fast tracking your way to $1 million, even though that million's not going to be worth shit by the time you make it there. But you're not going to get ahead holding cash when you're looking at a stock market going up 30% a year. The tax laws might change now. Instead of 50% tax on capital gains, it changes to 70. Yeah, that's another problem too, right? I think you're talking about Canada, because in the US, I think you guys pay full capital gains tax, where in Canada, we have much better tax benefits when it comes to investments, because we only pay 50% capital gains on our stock trade. So if you bought Apple, you doubled your money, 100,000, you turn it into 200,000, and you say, "Hey, I want all this profit. I'm selling all my Apple shares." Now you have 200,000, 100,000 being those capital gains. The first 50% of those cap gains being 50,000, 100% tax free. The next 50% is taxed at your marginal income rate. Honestly, Canada is the easiest country to get rich in. We have the lowest corporate tax rates. We're the most friendly to foreign investments like crypto miners, as I'm sure you're aware after the China bust. But yeah, I love Canada, man. Other than it's expensive as hell to live here, it's unimaginable to avoid some of these tax loopholes and corporate tax benefits. I mean, the corporate tax rate here is 3% on the first half million. Could you imagine paying 3% tax on the first half a million? And could you imagine being a corporation and making money off another corporation and paying zero tax? If you're transferring money between corporations, the government just waives the taxes on it. It's astronomical. I love it. But on that note, folks, I think it's been a pleasure. It's my first live on TikTok. Thanks for everybody joining in there. I'm going to try and do some more lives because I'm going to be excessively busy over the next week. So be prepared for a lot of companies that I'm just personally reviewing. These are like sponsored videos, but I will try and hiccup into a live stream maybe on Saturday or Sunday. And then I'm going to take a little bit of a break, and then I'll probably pick back up on Tuesday. So stay cool, stay awesome, folks. And I'll catch you on the flip side here. Peace.